What's up everyone, it's Karthik with MoneyVest. Welcome on board for our market open live stream. Hope you all are doing great as markets continue to slide lower. However, we are seeing some intraday buying pressure as markets are recovering a little bit from that overnight sell-off as expected, as we were talking about it during our pre-market, of course, Discord conversations, as well as my previous update on the market as well. So QQQs are down almost 1%. I mean, things were much worse at the beginning of this trading session. So, you know, from Friday's close, at one point we were down over 1.6, almost 2%. And right now we are recovering back higher as the S&P 500 has also recovered over 0.5%. It is down over 1% right now as I'm recording this video, as I'm doing this live stream. Tesla is, wait a second. Wait, did the market just opened? Wait. Did we go through like some kind of daylight savings or something? I'm so confused. No way the market just opened here. Oh my God, March 8th. Okay. So we did move clocks forward 1 hour. So market opens at 7 p.m. Indian time now. I am so sorry. I didn't even realize. I did not even realize it was supposed to be daylight savings. That's crazy. Because I was like, wait, Tesla's down 2.2 and this is such a crazy live stream right now, because I thought it was going to be an hour of us chatting about the market, but no, we just opened. Anyway, so this is indeed a market open live stream. This is not a pre-market live stream. So we are open. SPY down about 1%. QQQ is down almost 1%. Tesla is down over 2% as well. We got Nvidia down 70 basis points, and yes, it was it was daylight savings. So I definitely did forget that March 8th was supposed to be that day. I don't know why the US does it. It is what it is, but yes, we're changing our clocks, and now the market's open at 7 p.m. Here in India. Very interesting. And 4:30, no, not 4:30, but let's see, 7 p.m. 5:30 p.m. in Dubai. So 1 hour before than what I was originally anticipating. So okay, yeah, it is what it is. So let's dive right in. If you have any questions, I mean, I'm here to cover any stocks, all of the markets for you guys. Volatility is up over 31 right now, so we're over 5.5% higher. So if you come over to the VIX dashboard, we're going to be even more rare than we were before. So trading up to over 31, 32 is going to probably put us at over 92, 93 percentile. Might even be more as soon as this page opens up. So we're at 93 percentile right now as the VIX is trading up to 31. So again, pretty substantial move on the day, and the MoneyVest index will load up in a few minutes here. Well, the markets are already open, so it might have already been updated, but S&P 500, here we go. Lowest level in 2026, we're at 2.85 on the S&P 500. So uncertainty, and we got the NASDAQ 100 right now sitting at 2.84. What's actually quite interesting is that this sell-off has been more towards the other sectors, other parts of the market, as opposed to technology. I mean, technology already kind of pre-sold this entire move lower. And so as a result, we're not seeing technology sell off as much as other sectors right now, because, you know, the S&P 500's MoneyVest index was at over 3.2, 3.3 just a few days ago, and the NASDAQ was still in the 2.9, 2.95 levels, and now we're almost close to each other with the S&P at 2.85 and the NASDAQ at 2.84. That basically tells us that there is a bigger sell-off in non-tech sectors at the moment. So yeah, 5:30 Dubai, 7 p.m. is going to be for India, and let's dive right in for some individual stocks as well. So yes, the NASDAQ and S&P almost are the same on the MoneyVest index. Yes, they're both in uncertainty at 2.85 or 2.84, and the volatility dashboard is now in the 93 percentile. So bottom line is, I mean, this is now starting to get very, very attractive. I mean, there's a lot of deals out there. There's a lot of discounts. I mean, SoFi is now down over 5.7, almost 6%. HIM's having a fantastic day. once Novo Nordisk announced that they're dropping the lawsuit and all the charges against HIMS, and in fact partnering with that company. It's up over 38%. At one point it was up over 52%. So trading up to over $21 per share. Absolutely insane momentum coming in for HIMS and hers. Again, at one point it was much higher. So we're seeing a little bit of intraday selling pressure. I'm sure there's going to be some profit taking or some losses getting cut on HIMS because of how many people have been down on this stock. But today might be a great day to start looking into selling some calls for HIMS and hers as well. So if you actually do have some shares, like I'm probably going to do that today. I'll probably sell like a longer dated call on HIMS, but my cost basis is still a lot higher. So it's still in the 40s right now. I'm still down over 50%. So I'm going to see if there are any premiums for HIMS, anything over $40, even if I have to go out for November or December this year. So if I go out to, let's say, November 2026 or December, going out to $40, yeah, that's reasonable. $3.80, not bad. So I'm going to definitely be looking at selling a call for my HIMS position, collecting a little bit of premium for that as well. So that's where we are. And let's see, do you or anyone plan to buy to close for any of the positions? I mean, it depends on my covered calls and where they're trading. I mean, I did pick up TQQQ this morning in pre-market, and the plan is to continue to dollar cost average a little bit further. It doesn't look like the markets are getting bought up right now, as we are seeing some red candles coming in. So we'll see what kind of day and what kind of week this ends up being, as we do also have inflation numbers coming out later this week. So I did do a starter position on TQQQ, nothing crazy, just to get started with this position. The plan eventually is to be a lot more aggressive with those leveraged ETFs. In times of uncertainty, in times of crises, these are the ones that actually drop substantially, right? So the underlying indexes, if it's NASDAQ is down 20%, 25%, leveraged ETFs are going to be down anywhere from 40, 50, 60 to as much as 70%. And those are going to be the times to be a lot more aggressive for those. So so any questions, any other questions, feel free to post them in the chat. I'm going to try to read all the comments, all of the chat here. I forgot to. Matchbox says, Walter, you were right, 100%. And yeah, this is quite crazy, right? I was all ready to talk about the markets for an hour before they opened, but yeah, guess they're already open now. So, I think I'll look for a $30 covered call on him short term because my cost basis is 26. Absolutely go for it because, as long as your strike is above your cost basis, that's the rule number one that we like to follow for selling options. For selling calls specifically, is that you want to make sure that your strike is above your cost basis and you're not selling an option with a guaranteed loss, which is what you would be doing if your strike is below your cost basis. So looking at SMCI, is it a generational buying chance? I think SMCI has gone through a lot of turbulence, a lot of volatility. I mean, it's been all over the place. It's gone down by over 64%, only to go up again by over 170% and then go down again. So if you're okay with that level of volatility, then I think SMCI is trading at a pretty decent, pretty attractive valuation. At 24 times earnings and a little bit under 1 times sales. And if you consider the earnings on a forward basis, I mean, you're looking at a company generating about $2.20 at a $30 price tag. Remember, that brings it down to like under 15 times forward earnings as well. So yes, valuation is low. However, on a technical basis, I mean, it's making a little bit of a bearish flag as well. So this is, again, the lower highs and sort of lower lows, a little bit of consolidation sideways. This was the insane sell-off consolidation. And if we do break down further from this bear flag, I could see SMCI at 27 down to potentially down to $22, $23 in the future as well. But that's just the bear flag from a technical basis. From a price action perspective, again, very, very volatile stock, but valuation do suggest for some decent risk reward here. I'd love to sell some calls but I simply don't have equity or quite enough stocks yet, since option contracts are traded 100 shares at a time, which is quite a lot for certain stocks. 100%. And I would start small. I would look at companies that are that you do already have 100 shares for, whether these are lower priced companies or companies that are higher priced, but you want to build up to that position that you have 100 shares, and then look at selling calls, right? Capital should never be a limitation to what you want to do. It's just a question of whether you can get up to those levels or not, right? Because eventually the goal is, hold on one second, let me just cut that. Let me just text for 1 second. I should probably quit WhatsApp as well. Okay, so markets are indeed selling off further. I don't know why that happened. I don't even have WhatsApp open. That's so weird. But yeah, so you always want to work your way up to it, right? So the goal obviously is to eventually grow your portfolio, have more shares of companies that you want to invest for the long term. So that should not be a limitation, and it's okay if you're not there yet, but the goal should be to keep building and eventually having those 100 shares that you can sell calls on. So it's very, very important to do that. Okay, so if the news for HIMS is confirmed, it could go much higher, but I don't mind losing my shares for $30 plus the premium. That's great. I'm also probably going to be selling calls at $40. And yes, it has been announced. Intuit, Melly, can I buy? I think Melly is trading at a very attractive level. Anything under sub 1700, 1600s, I think that's a pretty good price point. It was trading down to 1660. Right about there. So 1650 was a pretty good support, and resistance is going to stay put all the way up to these levels around 1800, 1900. But as I said, it is trading at a pretty attractive valuation as well. It's part of the shopping list, so it's already part of our MoneyVest platform. I've put together the fair value, the buy targets, all of that is already there. Okay, Arista Network, please. I'm lost amid this sell-off, what to focus on and what not to. I'm still 50% down on HIMS. Does it make sense to cut the loss or wait a little bit longer? Vinay, so, for HIMS, it's a tough call because it's a company that, is very volatile. I mean, it's going through a lot of turbulence. Of course, sold off over 70, 80%, and now it's bouncing back higher, 42%. And with this news, I think it does clear a lot of that uncertainty, and that's why it is up over 42% today, because it does obviously remove that cloud that was hanging over HIM's head, right? And that is one of the reasons why there could be more potential upside going forward as Novo Nordisk is kind of dropping their charges against HIMS. So I would say you can consider looking at options as a potential way out, looking at selling calls on a very strong green day like today, and then go from there. And it really depends on what your thesis is for that company, right? What was the main reason why you bought it in the first place? Was it for a swing trade? Was it for a long-term investment? And is that thesis still intact? If the answer is no, then it was never a good play to begin with. If the answer is yes, then this was a dollar cost averaging opportunity. The risk reward was pretty solid, and right now we're just bouncing back higher from those levels. Okay, let's take a look at Arista Network as well. So ANET, looking at this company right now, we are seeing down about 1.4%, but more or less consolidating sideways. And so support level is going to step at $120 with a resistance up to 162 for Arista. It's been one of the phenomenal stocks here. It's actually part of the shopping list as well. Put together the buy targets and fair values and everything on there. And from its lows from back in 2020, the stock's up over 1,100%. So it's more than 10x from those levels, with a very strong support down at 120, as I mentioned, and resistance up to 162 for Arista Network. So it is part of the shopping list. So I really, really like Arista. Okay, S&P is down about 1.3%. We are seeing a little bit of that continuation of that sell-off, and the NASDAQ is also down over 1.3%. So there doesn't seem to be any relief in this market right now, as oil prices are trading and hovering at just under $100 per barrel, as we got up to as much as 120 in overnight trading, and then a massive amount of selling pressure coming in for oil prices to once again stabilize at $100 a barrel. Volatility is pushing back up over 6% today, 31.4 as market breadth also absolutely get destroyed. 14% down on Friday, and we'll see where it ends up on the day today as well, as more and more stocks actually continue to pull back. So it was a long-term investment, and then the Novo lawsuit news came out, and then now it's no longer in the picture. So I think all in all, it makes for that uncertainty that has gone away. So can you cover the energy ETF? Yes, absolutely. Let's take a look at XLE. It's probably up today, up over 32 basis points, having the best year, up over 27% on a year-to-date basis. But then if you, again, come over to what sectors are actually falling, it is not technology. I mean, technology is down. It's down over 1%. But a lot of that liquidity is coming out of materials, financials, industrials. I mean, gold is down, communication services, discretionary. So those are really the areas that are getting hit hardest, with Tesla now at 385, down almost 3%. And we got Nvidia down over 70 basis points as well. So that's where we are in terms of market concentration. We've got about over $831 billion worth of outflows already in this market, as liquidity is indeed flooding out, down over 1.3%. And this is what the market snapshot looks like. Again, technology is not the one that's actually selling off a lot, even though it is pretty red. I mean, it looks pretty brutal so far. But energy is the one actually rallying higher. But the sell-off has been more tilted in other sectors as opposed to technology, is what I'm trying to convey here. Because the fact that the Money Invest Index came down so fast for the S&P and the NASDAQ actually stayed where it is, just goes to show that this was a sell-off which was more geared towards the Dow and the S&P. And let's just quickly look at the Dow versus the NASDAQ as well and try to understand this picture. And you can see that in the last few days here, it's very evident, very clear that Dow Jones actually started underperforming the NASDAQ in the middle of February. So down over 4.6%. So even though we've seen this outperformance from the Dow since November, all the way till middle of February, I mean, the Dow has performed much better. There was AI disruption, software stocks selling off, but then eventually, more recently, as far as a couple of weeks ago, the NASDAQ has actually held up much better, and the liquidity has been coming out of the Dow and the S&P 500. We can see that on this chart probably as well, a little bit, not as much, but since the S&P has a big component for tech, this is not as clear as it was in that Dow and the NASDAQ relationship. So that's where we are. Gold prices right now are sitting at just over $5,000 per ounce, consolidating sideways again. And then silver prices, last time I checked, we're sitting just over $80 per ounce here. $83 is where we're at, as crude oil is sitting at 101. And Ethereum just over $2,000, and Bitcoin just a little bit under $69,000 as well. So Broadcom is holding up well. Yes, so Broadcom, I do want to pick up more shares. In fact, I might actually do some dollar cost averaging today to pick up some shares. And again, continue to build out that position to 100 shares for Broadcom. So Broadcom, Mercado Libre, Amazon, what else? Palantir. Palantir I've been buying a little bit. I already have the call, which I think the timing kind of worked out well because we did pick it up in the 120s, 130s. And then it rallied all the way up to 154, 160. And of course, I sold a call, and right now it's just consolidating sideways, which is pretty good. The Meta calls I also have at 770, which is also higher, which is also green. That's good to see. It's probably going to be up even more today, given that Meta is selling off. So let me see how much we are up on those Meta calls here. Back in the 620s for Meta. So those Meta calls are up over 55%. 55% is where we are for Meta. The iron calls are up 51%. Hood calls are up 14%. Nvidia calls are up 31%. SoFi calls are up 76%. That's the best part about the SoFi calls. I never really thought that those calls would be up as much as they are. Because I was kind of ready to let go of my shares. I was like, you know what? I don't think SoFi is going to trade below $25 ever again. But never say never. Anything is possible, right? Anything can happen. So these are all the covered calls that I have as a way to kind of hedge the portfolio a little bit. The total P&L for options, as you can see here, options total sitting at $23,000 of the $48,000 that are actually left in premiums. So if I were to collect this entire 48K, the total profit from all the options that's still left in these options would be around 70, right? So $71,000 is what we're looking at. That's the overall hedge. If everything goes south, if everything kind of hits the fan, at least I would have a $70,000 buffer on all these options. And this is all not even accounting for the remaining shares that I haven't sold any calls on. So this number could easily be close to $100,000 of complete hedge, right? If things were to go south completely, markets tank 20%, 30%, all of this will be realized, right? All of this will get further out of the money. All my calls will get out of the money and will expire worthless, and I'll be able to collect over $70,000 in premiums. If I sell more calls, this number, as I said, I've got another 600 shares of, I've got 1,200 shares of SoFi and another 400 shares of NVIDIA that I haven't even utilized, and then the Broadcom position that I'm building, right? So it could easily get up to over $100,000 in hedges. And that's why I highly recommend, I mean, if you do have a portfolio for long-term stocks, it's totally fine. If you want to invest, that's what we do as well. But it's important during times of uncertainty, during times of volatility, to at least hedge your portfolio a little bit. So these are the SoFi calls that I'm talking about, 76%. I still have $1,900 left in this. Can I wait? Yes, I think a little bit longer. They expire in September, $25, and SoFi right now is trading down to what, 17 bucks. So $18. Can SoFi rally to $25? That is a 40% rally by September. Absolutely. I mean, we've got entire March, April, May. I mean, we pretty much got the entire summer, right, for SoFi to get up there. So I'm gonna let these be. Like, if I can see this number over 85%, so another 10%, then I'll probably just call it. Then I'll just close them out. Then I've got the Palantir $200 calls that are expiring December, from 150 to 200. I think that's going to be in there, what, 20, 25, 30% for Palantir from these levels. So $200 is going to be another 30%, roughly 29 to 30%. So yeah, I mean, I think they expire in the money, out of the money, doesn't matter. I'm willing to sell my shares at 200. The NVIDIA 170 calls, 31%, they're up $8,000. There's a lot of premium left on this, about almost $18,000. And then these are the Robinhood, 14%, 51% for Iron, and then Meta, big ones, 55% right now. So that's where we are. You want to increase our shares on SoFi, right? Yeah, so I want to pick up another 600 shares for SoFi. We'll probably pick up some today. We'll send out the alerts, and then we'll be looking at picking up some Broadcom today as well. So I think it's a good day to pick up some SoFi, trading at $18 a share. So which stocks are great for DCA or nibble at current prices? This is for a long-term portfolio. I like to deploy 30% of available cash today. So the best place to find that is going to be none other than our shopping list, and not only that, I actually posted our ETF list as well. So if you come over to the shopping list right there, so this is the link, right? So you just come over to the MoneyVest platform under shopping list. If you scroll up a little bit, you've got now stocks and you've got ETFs. So there's 52 ETFs that I updated on March 8th, quite literally yesterday. So you can check out this entire list. It's broken down between, I think, 10 different categories. You've got growth, got value, dividends, income, real estate, commodities, energy, different themes, different sectors, crypto, everything. Whatever it is your goal is, like whatever your objective with having ETF exposure, what I've done is that I've essentially spent hours researching and searching through a lot of ETF database to present you with the best of the best. And the way we categorize the best is basically looking at the assets under management, right? We want something that has a lot of assets under management, right? So a lot of demand for it from a very strong issuer. So BlackRock, State Street, VanEck, some of the best issuing, Vanguard, some of the best issuers of ETFs. So those are the only ones that I've presented in this sheet, in this page. So we got the assets under management. We got TER, that is your total expense ratio. So we want something that is super cheap, right? We don't want something that is expensive to own. A lot of financial advisors, portfolio managers will charge you insane amount of fees, like 1%, 2% per year. That's crazy. You don't need to pay that much. You can essentially replicate whatever the strategy is through a very low cost ETF or an index fund. And that's exactly what this list is for. This is a total expense ratio. You can see 0.09%, 0.03%, 0.03%. Like that's like next to nothing, right? That's the cheapest way to get exposure. Again, breaking it down with strong issuers, highest AUM, lowest expense ratio. Then we present you the number of holdings. So how many holdings does that ETF actually have? And then the top 10 concentration, right? What's the concentration for the top 10 companies in that ETF, and then what is the dividend yield. So dividend yield for growth is going to be lower, but then if you scroll down a little bit, there's going to be a dividend section, which obviously the yields are going to be much higher. As you can see, 11.7%, 10.8%, and then some ETFs are not going to have any dividend yield. They're going to be fully concentrated on one or two assets, and so that's going to be their entire holdings. And then other objectives will have other criteria and other things. So yes, all of that is available now on the MoneyVest platform. Stocks and ETFs. Spent hours to kind of bring it to you guys so that you can do the research, do the analysis, and figure out, okay, what's best for you. So hopefully it is helpful. And any other recommendations, anything else that you think should be included in the shopping list, should be considered, definitely do share that on the Discord. We're always looking for great ideas, great feedback. We've got a feedback channel that people are using to kind of share their own insights and or share their feedback to kind of help us improve the platform as well. So I don't think there will be a short squeeze on HIMS. That's just an X hype thing. I think HIMS was, of course, heavily shorted. So yes, we are seeing a lot of volatility here, but I'm curious to see what the average cost breakdown is going to look like for HIMS, because, you know, given the massive sell-off. So let me just show you exactly what I mean. If I bring over the HIMS, there we go. So the average cost for all HIMS shareholders is around $16.35. So, I mean, there's been a substantial amount of dollar cost averaging for HIMS. And this is what that breakdown looks like, just to kind of show you guys very quickly. So this is what we're looking at for HIMS. And you can see that after the massive sell-off, the average cost among all traders, all investors, sitting at $16.34. That means that over 52%, well, right now, given that shares are rising, and it's probably not accounting for that, it is already making most people back above the water, right? They're back profitable on this trade because of how many people dollar cost averaged down on their positions. And so what we're seeing right now with the intraday candle is nothing but profit taking, right? That's what it is, because once you're down a lot on a stock for weeks and months, any little ray of hope you get, like a 30%, 40% jump, is your way out, right? So that is exit liquidity, leaving the market, probably never going to look back at HIMS. But it's also good for long-term investors because it kind of, you know, removes all of those investors who were traders or were not willing to hold on for the long term anyway. So it kind of rinses all those people. And now if HIMS can find a floor, can find a support, of course, we're leaving a little bit of gap down there. But if it finds a support, stabilizes a bit, then it creates a little bit of upside momentum on stronger fundamentals and stronger volume. So I think that is also very important for HIMS long term. So okay, thank you so much for joining, everyone. Again, sorry for the mix-up as the time and the clocks changed an hour. And so tomorrow I will be live at not 7 p.m., but at 6 p.m. Indian time, which is going to be around 8:30 a.m. New York time. So thank you so much. Really appreciate you all. Again, link's going to be down below if you're interested in joining our MoneyVest community, with the shopping list available, trade alerts, members only videos, educational videos. All of that is going to be available, and let's see how the markets do today. So happy investing.